Guys, what's going on? Good morning. Good morning. So we're going to be currently looking at the market. A couple of guys from Evolution Traders had some good plays off the bell. We'll kind of get into them in a minute. Andre took over $1,000 on Nvidia, and then we had another member take close to 250 on a quick scalp on Nvidia as well. So what we're looking at, if you kind of look at Nvidia here down in the bottom right corner. Okay, that's what I want you guys to focus on, is the bottom right corner. Now, if we look at Nvidia, we know that the daily chart is beaten up already. So what we want to see is a loss of the pre-market lows. So once you get that loss of that pre-market low action here, you have the nice flush. Now you can see that the pre-market was already trading below this linear regression channel here. So realistically, all you would be looking for here is just a little bit of that pre-market low break. That would be your entry. You can use the hourly chart 5 SMA to kind of ride your stop a little bit here, and then kind of take this down into the middle of the channel. Now again, your bottom hourly support is going to be around 414, but it doesn't mean you have to catch the whole move, right? So the entry price was around 425.70s. Let that confirm, jump short, and then try to sell on the way down. We're looking at the Qs here as well. Qs kind of testing the bottom of the range here from the pre-market first hour lows, that 354.86. And you could get a little bit of a bounce here. Again, we're going to have some resistance on the triple Qs at around 356 and then 357. You've got Tesla as well, kind of trying to put in a little bit of a push higher here. It's got room to 219.50s. Again, that's going to be the 20-day moving average as well as the linear regression on the 1 hour chart. Also looking at Apple, 171.70s. Definitely want to take a look at Apple. If Apple kind of rejects up here closer to the 173 or 173.50s and then kind of rolls back down, any loss of 171.70 is definitely a short on Apple. You'd have to look at the weekly charts to kind of see exactly what I'm talking about. Now, the market does funny things. The market can, reverse 200-300 points today on the futures. It is what it is, but the main level that you want to be looking at going into next week is going to be all of this week's lows. Okay, so this week's lows is definitely what you're going to want to be focusing on, because when you definitely pull up this week's lows, they've got a lot of room down. It actually starts another leg. So whether you get some sideways action, you get some consolidation, or you get a dead cat bounce, that's perfect for the shorts, right? You want to ignore the bounces and just let those short levels confirm. Now, again, if you want to get eager to start playing, back up to the upside, the bulls really have a lot of work to do. They've got, they have to get some closes at least on the daily time frame back over their short-term moving averages, the 5-10 day moving average. Let's say, for example, you miss a dead cat bounce on a particular stock one day. Doesn't mean that the move is over. Doesn't mean that you're too late. These stocks are still so far under supply. You have, for example, the triple Qs are trading below their 50-day moving average for the 4th consecutive day in a row now. So, in order to see the whole market kind of swing together, where everything's kind of moving, simultaneously, in conjunction with each other, the triple Qs, are really going to need to reclaim the 50-day moving average on a close. Now, again, it doesn't mean that there's not going to be ups, right? It doesn't mean that there's not going to be green candles. You just have to really kind of sit, be patient, pick your spots. That's why I always focus on whatever stocks that you trade, try to trade the same names each and every single day. Even if you're trading on the future side of things, that doesn't mean that one day we're looking at the ES, the next day we're looking at NQ, next day we're looking at RTY, next day we're looking at US 30. No, you stick to the same instrument, because when you start to play the same instrument, you get familiar with the way that the chart moves, and you also have a good eye at where these levels have been forming, right? So these levels have been forming, for quite some time. So for example, if I was to pull up in the bottom right hand corner, I'm going to pull up Nvidia's daily chart. So if we kind of look at the daily chart here, okay, and I'll make this as big as I can possibly make it here on a 4-screen 1 monitor. But if we look at yesterday's low on Nvidia, we came down and we tested this 5-day moving average. okay, and we're actually sitting right here at the 10. So you know that once we gapped down below, this is the first time we've been below the 50-day moving average in the last 3 to 4 days, right? So that gap below this short-term moving averages here, the momentum is down, okay? The momentum is down. Your initial kind of, stop loss or take profit was 420, and your next level would be around 411. Okay, so this is automatically telling you we should be thinking short automatically. What's going on, Steven? This should automatically be thinking short off the jump, just due to the fact that why would I want to trade a stock long when it's below its short-term moving averages? Okay, regardless if Nvidia bounces 10-15 points today, in order for Nvidia to even look good back up to the upside, it needs to reclaim 435. We're currently trading at 418. We're a long ways from 435. So Nvidia is down 15 points and 3.5% on the day. I'm not even wetting my whistle on this thing until it gets back over 435. From 435 to 443, and then obviously over 443, we've got a lot of room to the potential upside here on Nvidia. But again, there's no rush to be trading to the long side. So, definitely make sure you understand where you sit on the instrument that you trade prior to coming into the day. So going back to the 5-minute time frame here, make sure you guys can see that. Back to the 5-minute time frame here on Nvidia, you can see that once we washed out this pre-market low area, we traded all the way down and we came pretty damn close to 414 here, which is the linear regression. That would be our bottom kind of support here for a short-term bounce. Now, this doesn't mean bounce that we're coming all the way back up to 435, although Nvidia has done crazier things in the past. But again, what all it means is that you need to be taking profits into this area. Okay, so again, short trade on Nvidia short term is done. Again, anyone looking to, because I've come across this before, everyone sees Nvidia down 10, 12, 15 points, and the first question that's asked is, can I get in now? Well, the entry was 425. So if you have no problem chasing a stock that's down $14 on the day, be my guest. But again, you kind of missed the boat here on this. What you would need to have happen now is a short setup that confirms next week. Okay. And why next week is because we need to confirm this week's lows. And that can't happen until at least Monday. So whether it happens Monday or next Tuesday or next Wednesday, you're going to have to sit on your ass and you're going to have to wait. We've got Tesla making a little bit of a push higher here, trading at around 216.75. So again, Tesla's lows are down here at around 213.40. Any point in the day today, Tesla loses 213.40. That's a short position. I would start taking profits into 211. Again, same thing with Apple here. Anything below 170, 171. First pit stop's going to be around 50 cents down at the Bollinger Band, and it's got room to kind of work down into the mid 170s. So again, for all you futures traders, if there's any futures traders on here, I'm watching the triple Qs for right now. Chart setup is going to be the same. So what we would be looking at here is the hour lows on the Qs, 354.84. And actually, I can do it just in case any futures traders come in the room, give you guys the exact levels on that. So what we would be looking for here, on the Qs is for a confirmation of 14,615 to get confirmed to the downside. Now, if you're an aggressive scalper, right? So if you're an aggressive scalper, you need to be looking at smaller levels here. Again, the 14,615 is definitely the area that I would look to short. But again, right now it's kind of holding a little baseline here. It's holding a little bit of a floor here, kind of pushing higher towards this 20-day moving average here. Now, if we get the next 5-minute candle to confirm, is there a lot of room to the upside? Not really, right? Not really. It's not nothing that's, going to be life changing. But a confirmation maybe over 14,655 has room to push into 14,671. So again, you can see if, taking 5-6 points here, if you take, from 14,651 to 14,670, if taking 10-15 points is your jam, then, definitely, hammer it for 5, 10, 15 points. But again, look, if you have a hard time kind of understanding what's going on my charts, right? Because it looks so confusing with all of the lines, just understand this. This is the only thing you do need to understand, and I'll make this as simple as fucking possible. The more lines, okay, for example, if we're trading to the upside, the more lines that we see to the upside, the more resistance levels we're going to have. That's all it means. Okay. So what you do not want to see this, like that's what you don't want to see, is you don't want to see this congestion. You don't want to see this confusion, because all this means is pit stop, pit stop, pit stop, pit stop, pit stop. Okay. We need open space. So for example, let's look at Tesla. You notice how, if we get over the first hour's highs here, that we have nothing until 219. Well, potentially there might be a trade here over the first hour's highs, right? So if you look at that over the first hour's highs, 217.60, potentially you've got at least $2 to run into your next supply. That's how you're going to read the charts. It's very, very simple. Okay. It's not rocket science. It's not meant to be rocket science. And again, especially coming off of extended selling that we've had this week, how many days in a row have we been red, right? How many days in a row have you seen the market give back fresh gains? So what that's telling you is that market's due for a little bit of a breather, right? And whether the breather is a type of bounce that's going to last an hour, last all day, last a few days, we don't know that. We don't know exactly how big the bounce is going to be on a particular dead cat bounce. But what we do know, okay, what we do know is that there's a little bit of relief in there somewhere, right? Now, whether you decide to kind of partake in the bounce is on you, right? I mean, that's on you, what you feel. But what I can tell you is that when you're underneath daily supply zones, okay, when you're underneath daily supply zones, the last thing you want to be doing is putting all your chips to the table betting on a bounce, because what you're doing is essentially betting on the bottom. Okay. And the problem with that is if you're wrong, you're going to be wrong in a big way. Okay. So you might be green for a day. It's the day you decide to swing overnight where the market gaps down and continues to flush. That's the problem with going long when you're underneath daily supply. And daily supply means this: starting with the 50-day moving average, check your stock or check your index. Are we below or above the daily 50-day moving average? From there, it's the 20 SMA, the 10, and the 5. Predominantly, okay, predominantly. Now, again, nothing is concrete, right? The market's very bipolar. But predominantly, if your instrument, whatever you're trading, whatever asset you're trading, is below the daily 5 and 10-day moving average, the pools, right? The pools, the red candles are always going to be more drastic than the green candles. The green candles will kind of trickle higher, go sideways, and then you get a nasty pull, right? That comes kind of right back down to the middle of the range. And that's when you get a lot of traders, talking about, oh, well, I can't get anything going. The market's choppy, it's range bound, this, that, and the other. No, what you're trying to do is you're trying to go opposite trend on a stock or instrument that's below or above its short-term moving averages, depending on, whether you're going long or short, right? So if you're used to going long, right, then all your brain really identifies first as long setups. All your brain is going to kind of gravitate towards is green, right? So for example, let me just give you a general example. And I've talked to people like this in Evolution Traders, and I've talked to people like this outside, just in the trading space altogether. You'll see people that will say, they'll look at Tesla be down $3.40, but they'll see the green move to the upside, right? So they'll see this green move to the upside. They get so excited because, they want to go long, right? They understand that we've been trading down for, 3-4 days in a row, and they think they're going to catch the big one, right? They're going to catch the big one. So what they do is they go long, not understanding that we're below daily supply. We do have, some pressure sitting here at around 219, and the market pulls back, right? It takes 1 hour for the market to pull back. Notice the NASDAQ here. Look at the green candles. Look at the red candle, right? This is the effect here of trading below, your short-term moving averages, right? You can clearly see who is in control, and who is in control is definitely not, the bulls in this particular situation. And what I mean by that is, I'm not talking about for the year. Clearly the market's been ripping since January, 6-7 months, right? Anyone who hasn't identified that the market has been ripping higher for the past 6 to 7 months is an absolute idiot, right? If you've been trying to short the last 6 to 7 months, you're an idiot. And that is what it is. You need to get adjusted. Either your eyes need to be adjusted by getting glasses. Maybe your charts are inversed. I have no, maybe your platform inversed your charts when you were sleeping or something. But if you haven't been going long and making the majority of your money going long the first 6 months, you're an idiot. Okay. And that is what it is. If you're a trader, that is, right? Now, don't get me wrong. Have we had red days in the past 6-7 months? Of course there's going to be red days. Just like, there'll be there will be green days as well, and there'll be, short spurts where the market is, going up even in a downtrend. But what I'm saying is the vast majority of your trades, and I would say 80% of your trades for the first 6 to 7 months of 2023 should have been long. And if they're not long, like I said, we've got problems. And if you want to talk about it, we can definitely talk about it. But so what I'm looking at here, I just got a couple of things on my screen here. Looking at Nvidia, this trade's over for me as well. Looking at the Qs here, so the Qs pulled right back down to the bottom of the range here, put in a new low. So 14,609 is what we would be looking at for a confirmation. Now it's starting to get bought back up here. So anytime it starts to get bought back up like this, you have to sense some strength, right? We do have Apple pushing higher here as well. Now Apple's going to be your big daddy. It's definitely, if you are trading the NQ on the future side of things, definitely want to look to things like Apple. You want to look to things like, Microsoft, Nvidia. You kind of want to know what those stocks are doing. But the market is very bipolar. I mean, you have Apple pushing to the upside, you had Nvidia get slammed, right? So, these are two bipolar opposites that are both located within the NASDAQ 100 here. So you're getting a little bit of a mixed bag, right? A little bit of a mixed bag. What's a good time to read 50-day moving average? So it depends on what your style of trading is, right? So, if you're a scalper, does the daily 50-day moving average mean anything more to you than other than possibly a directional bias? Probably not, right? But if you're a swing trader, or you're a longer term trader, or you're just, a normal day trader at all, if it's like this, if we're trading below the 50-day moving average, your bias, around 60-70% of your bias should be looking at short setups. Okay, it is what it is. Now, for example, today we're getting a little bit of a pop, right? So if we kind of look at Tesla, okay, I'm gonna use Tesla as an example here. So we're trading below the 50-day moving average on the triple Qs, right? So what we're looking at here is, if you're expecting a dead cat bounce, you've got to really trust that gut, and you've got to really manage your risk. If we look at the lows here on Tesla, 213.40, right? 213.40 was the pre-market lows. If we look at the first 5-minute candle of the day, the lows are 213.47. If we use this as a hard stop and we tell ourselves we're not going to lose a penny less than 213.40s, if we can confirm the pre-market highs, which is going to be sitting somewhere right here around 215.50s, we're going to go long. Now understand, you're going to have roadblock here, here, here. Now look at where we've been teeter-tottering around. This moving average here is the 150 simple. Does it matter what moving average it is? 150? Does it matter if it's a 200, the 100 on this chart on a 5-minute time frame? Not really, right? They're all going to hold, a significant amount of weight. But what you're looking at here is we're stuck below this moving average here, which is supply. So support and resistance, supply and demand, it's all the same shit. Moving averages, it's all the same shit, right? It doesn't matter what you're looking at. That's something that people get hung up on. It's like, well, I draw my own support and resistance. It's fine. It's the same shit. It's going to match up with what I got on my chart anyways. I could take everything off this chart here and I can write, draw supply and demand zones, and then put this big boy chart back up here, and it's going to be the same shit. So what I'm looking at here is, if we can get over that, Tesla's going to have room to push into 217.50s. That would be an area where you would want to take profits off the bell. If you're anticipating a dead cat bounce today, what's your hard stop? 213.40. When would you have gotten in? First 5-minute candle of the day. What would the price have been? 250, 215.50. You're giving yourself a $2 risk. If $2 risk is too much on something like Tesla, you're trading a stock that's out of your league. Again, you trade Tesla, Nvidia, these stocks swing 1, 2, sometimes 250 in a single interval, right? So if you can't stomach the ups and the downs of that roller coaster on that particular interval, you're trading a stock that's too big, right? I tell people all the time, Everyone loves to make gains, you know, when Nvidia is down 12 bucks, when, you know, something like Tesla over pre-market highs from 215 all the way up to 217, $3, $4, $5, you know, people love to see it, right? They love to make that money. They love to cash that check, but they can't stomach the drawdowns, you know? So you have to put yourself in this situation when you're day trading. If you want to make like, and I never, you know, set goals on a dollar amount, but let's say, for example, you're looking to make 500 bucks in a day, right? On a trade. Well, you better fucking be ready to lose 500 bucks, right? And the problem is most people want to lose 50 bucks, but they want potential for 500. It's just not going to fucking happen, right? It's just not going to happen. Now, will there be those particular trades where the setup is clear, you get in and the stock just goes and it never even tested your stop loss? It never even tested your entry. It just runs 100%. But those trades are far few in between. Most of the time when you get into a trade, this son of a bitch is going to put you in drawdown within the first 5 to 15, 20 minutes. And it's in that point in time, what do you do? How do your emotions play out? What, you know, what are you feeling when that stock is not doing what you want it to do, right? When you start to pull down $1, $2, depending on the stock you're trading, it could be futures. I don't really care what you're trading. If it starts to pull back on you and you start to feel that level of anxiousness or nervousness because, you know, you had anticipations of making $300, $400, $500 on a trade, and now all of a sudden you're down $300, $400, $500 on a trade and you can't stomach that, you know, we've got problems. You know, a lot of people in especially even in the future side of things, a lot of people, they want to risk, you know, 2 points on the futures and they're trading NQ, but they want to capture 50. Doesn't make any sense. This thing's going to move up and down 10 points on your ass. It's going to move 10 points in a matter of 10, 15 seconds. If you can't allow this thing to kind of move around, you know, you need to reevaluate your trading plan, you know, or your position sizing. Either your size too big, right? You know, I don't care if you have a $50,000 account. If you have a $50,000 account and you think that you can go trade, you know, 2, 3, 4, 5, you know, minis on your personal account on the NASDAQ futures, go take a bad trade where you lose 25 handles or 30 handles on the NQ in 5 minutes and you're down $3, $4, $5,000. How many times can you afford to do that? I don't give a shit if you've got $50,000 in your account. How many times can you do that before you blew yourself up, right? So I always recommend to everyone, you know, start off trading micros, right? I'm talking to futures guys right now. If you have no idea what micros are, then sit tight. I'll get to you in a minute. Start off trading micros, right? You know, if trading 2 or 3 micros doesn't do it for you, then, you know, play 5, play 10 micros. It's a lot easier to manage than playing 1, 2, 3, 4, 5 minis at a time, right? You can scale in out of multiple contracts. You can add to your position in multiple spots, whatever, right? But again, start off. If you can't even make $100 a day consistently, what makes you think you're going to make 1,000? Right? What makes you think that you're going to make 500? If you can't make $50 a day, what makes you think you're going to make 500? Right? So it's like start small, right? Start small. And I get it. For some of you guys who have been trading and you guys have been around the game for a while, and maybe, you know, you've had some success in an easy market, right? You've had some success in an easy cycle. And now times get a little bit tougher, or, you know, you bounce around strategies, you do this, that, and the other. And you're having a little bit of trouble. You look at, oh, well, you know, what's $50 going to do for me? You know, what's $100 going to do for me? I'm going to be completely honest, right? You know, completely honest. There's 22 trading days in a month. If you were to average $100 a day, and of course, I'm not saying you're winning 22 days in a row, but if you average, right, some days you might win 250, some days you might win 80, some days you might have a great trade that makes 300. But if the average is $100 a day, you're looking at an extra $1,000 to $2,000 a month, right? Depending on your strategy and what the probabilities say. You know, most strategies are going to hit at around a 60% edge. You know, if you play them the way they're supposed to be played, 60% edge, I feel is very, very good. But, you know, anything over 60%, again, you know, I'm going to change the topic for one quick second, but I see sometimes on social media, you know, some people say that, their strategy, hits at 80% or 90%. Yeah, dumbass, your strategy is hitting at a 90% in this market cycle, in this market environment. What happens when the price action movement changes? Your strategy is not going to hit at 90% all the time, right? And if it hits at 90% all the time, you can walk down to fucking Wall Street and get a job at any fucking hedge fund in America, right? So go do it then, right? Or you're a multimillionaire and I don't know what the hell you're doing dicking around on social media anyways, right? So again, in average strategy, an average edge, 55-65% of the time, which means that you're going to lose 4 to 5 trades out of every 10 trades that you take, right? It's just what it is, right? It's just what it is. I mean, people are laughing. Nick, you're laughing. I see this shit all the time. I mean, there's guys online that are like, well, if your strategy's not hitting at 80% or 90%, you don't know what the hell you're doing. Bullshit. It's, if everyone's strategy, if you had an edge, if everyone's strategy from January, right, with the exception of a couple of weeks in February, but between January and let's say July, if your strategy wasn't hitting at 80%, you're fucked up. Right? It is what it is. The market was going up each and every single day. It didn't take a rocket scientist. Like, for example, look at NVIDIA. I make YouTube videos on NVIDIA all the time. Hottest stock of the year. Look at NVIDIA. I'm going back here to the first, and I'm just doing this to prove a point. How are we not making money on this chart? Right? Look at the chart. I can't even fit it all in here. Look at the chart. Green, 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 green. 1 red day, 10 green days. 1 red day, green, a little bit of a pullback into the 20-day. I mean, it's essentially green the whole way up. As soon as we had the gap up on earnings, look at the swings on this SOB, right? Look at the swings. You're getting 1, 2, 3 down days, and you're getting a string of new highs. You're getting, besides now, within, since the start of August, but obviously the trend has changed. But I mean, up until August, if you weren't making money long on this thing, what are we doing here? Right? It's like, what are we doing? Chasing things long, chasing things short. No, market can't go any higher. All of this stuff, guys, with that you guys hear. And look at, I'm not going to sit here and say that I've been trading for 20 years. I haven't, right? I've been trading the markets for 8.5 years. Okay. Is it a long time? To me, it feels like an eternity, right? But on a bigger macro picture, it's not really a long time. However, I've learned from people, okay, and I've been lucky enough and blessed enough to have someone in my close, circle that worked on Wall Street, traded on Wall Street, okay? They've been in this game for over 30 years, right? I haven't seen shit compared to these type of traders, right? But what I'm saying is that if you haven't been making money in this environment, there's a problem. The market, all of this stuff you guys hear about, market's overbought, it's oversold. According to who? Oh, well, according to this oscillator and according to this, this whatever fucking chart you're going to bring up, it's all bullshit. The market is worth what the market is willing to pay for it. Okay, it is what it is. This is a marketplace. This is nothing more than that. This is a marketplace that's built on emotions, and it's built on traders' position sizing and what their thesis is. That's all it is. It's a fair marketplace. Now, a lot of times newer traders, they're on the wrong side of the trade because they just haven't been in the game long enough. They're not experienced. Maybe they don't have the position sizing to play the particular charts. But, the whole point of this rant is that a lot of people I'm seeing, especially on Twitter and on social media, market is oversold. It's oversold. It's oversold. The market is not oversold until it tells you that it's oversold, right? So, when you look at the run that this has had coming from, January, NVIDIA, 154, guys. 154, we're trading at 480. We traded to highs of 480 and we're trading at 419 from 170, 150s. Do you think that this is oversold? Do you think that anyone on Wall Street thinks that this is oversold? If your thought about the market being oversold right now and we need a bounce, then why the fuck did one of your biggest, bear shorters, Michael Burry, put $1 billion worth of hedges on, worth of bets to the downside on the SPYs and the Qs? Now, whether he's right or wrong, does that mean that we're going to blindly follow him like a sheep? Of course not. But what I'm saying is he has his own analysis. He's got his own projection on the market. Does he think that the market is oversold? Would he be shorting into the hole in that particular situation with the $1 billion if he thought the market was oversold? Again, think about it realistically. Yes. Now here's a point I'm going to prove. Maybe the market, right? And not really, but I'll just talk hypothetically. Maybe the market is oversold for today, right? Maybe today it's oversold, which means that we can get a little bit of a 1, 2, 3 hour relief bounce. That's all it means. It doesn't mean that this thing's coming back to 480 next week, right? It doesn't mean that. So like, I think people need to get their definitions clear as to when they say market's oversold or overbought. Sure, the market might be oversold today, and we might go sideways for the rest of the day on NVIDIA. We might bounce a little bit on NVIDIA, but it doesn't mean that the market's not going to go lower in a week or in a month from now, right? Thoughts on the NQ's price direction by the end of the month. So if we look at the Qs, right? If we look at the Qs, okay, I'm going to make this bigger so we can kind of see it. I'm going to pull up the daily chart here on the NASDAQ, okay? So if we pull up the daily chart on the NASDAQ, we hit the highs here of 16,062, right? I want you guys to focus in, and I'm probably gonna have to move this down so you can see it. So just look at this chart really quickly here at the top right. Do we notice the 16,062, the highs that we put in here, right? Thinkorswim gives me this nice little banner here telling me what the highs were. Notice the blue line, okay? We notice the blue line. This is a linear regression channel on a daily chart, right? Here's the bottom of the channel, and here's the next channel level down here. We traded up to this to a T. So a lot of people, you know, sometimes they come on my YouTube videos and they say, you know, fucking nothing, too many indicators, nothing but spaghetti chart. You can't even make this shit up, right? You can't even make this shit up. This shit touched it to a fucking T. Now, does it matter? Does it mean that, you know, it wasn't going to push higher? Of course not, right? It could have completely continued to push higher. But what you would have needed to see in that particular situation, right, to all of the master traders out there that are floating around on YouTube, you would have needed to see this break, right? Break the top channel, put in a new high, back test this channel, consolidate, and then push higher. Then that would have told you that we were going to, you know, put in another leg higher. Once we got rejected here, we traded right back down to your short-term moving averages. We are coming into a little bit of a bounce spot. This is going to be a buy zone, right? It will be a buy zone short-term, right? Whether that happens in the next 2 weeks here in August, or we just continue to fade in August, you know, I can see us trading down on the NQ to around 14,492, you know, maybe 14.3s. Okay, so 14.3s, maybe within 250 points, 300 points. I can see us trading down into this range, getting a little bit of a bounce, right? How long is that going to take for us to get down there? You know, your guess would be as good as mine, right? I'm not going to sit here and claim to know, you know, how or when this is going to bounce. But you can clearly see we've got support here, right? What are these support levels? If you want to check it out, check out the 100 EMA and also check out the 100 simple. They're kind of stacked, sitting on top of each other. You can see this daily candle here on the that's going to form. If we do get a little bit of a bounce today, let's say for example the NASDAQ, the NQ finishes somewhat flat, okay? Maybe potentially, yes, we have a dead cat bounce next week. What would I be looking for as far as a price target? I'd be looking for something around the 14.9s, so maybe 300 points next week. Again, you know, market can do that in one day. But still, yeah, 14.9s would be my ultimate bounce spot. That would be your 5-day moving average. So again, you know, the market we can't even start talking about a true, you know, bounce, a true dead cat, until, you know, we start reclaiming probably 15,000 again, right? We need to get back over this channel, and we need to start breaking some previous red candle closes, right? So 15,000 I would look at on the futures. But again, that's an outlook, right? That's an outlook. That doesn't mean that, you know, we can't take any longs until 15,000. For God's sake, that's 350 points away. I mean, we should be able to catch something, right? So that's when you go down to your smaller time frames. So if someone was to ask me, like you did, where do I think price action finishes by the end of the month? I don't know, somewhere maybe around 15,000 or 14,300, in between that range. But yeah, like if you just look at the extended selling here, we're due for a dead cat. But keep in mind that once you dead cat, right? Let's say for example this, right? I want you guys to see this. Let's say for example we do come and we do bounce, this area here, which is your 50-day moving average, is the battle zone. So what I want everyone to focus on, regardless of what you're doing on a scalp by scalp or day trade by day trade basis, what I really want you to focus on is this level in here around that 15,000 to 15.2. Okay, 15,000 to 15.2. In this range in here, let me take this shit off. In this range, where you can see us bouncing right up here into this red line and purple line, this is what I want you guys to focus on, the 15.2s and 15.3s. Because if we get a little bit of a bounce here and we trickle around, this would be a perfect move for something like this to happen, right? For that type of move. This would be drop, dead cat bounce, continuation for the next low. That's essentially what you would be looking for. Now, what would change that, what would negate that is this, right? This is like, this is going to take some time. And what I mean by time is you're going to get those days, where the market is quote unquote choppy, right? It's quote unquote choppy. What you're going to need to see is something like this. We touch this area, that 15,000, 15.2, and we go sideways, right? For at least 3-4 days. That's what's called distribution. The longer you're in distribution, for example, I want to point something out. A teaching lesson is in progress here. Look at the last red day we had on July the 20th. Okay, if everyone's looking at the futures, pull up July the 20th. So we had a big drop down to our 10-day moving average on the daily time frame on July 20th. Look at the distribution that we had here. 1, 2, 3, 4, 5, 6, 7, 8 days. What is distribution? It means price action is not going higher, it's not going lower, it's going in a range, right? So whatever you call it range, you call it chop, you call it distribution, whatever. The correct term is distribution. But when you go through a period of distribution here, the longer the distribution, the bigger the move. Look at what happens here. Look at what happens here on the 2nd of August. Everyone pull it up on your chart, and it doesn't take a rocket scientist to see it. When we finally broke through distribution here, it's been a massive sell cycle, right? So if we get to a point where we bounce back up to the 15,000 mark, 15,000, 15.1, 2, or whatever in that range, again, because of, the futures have a big range to trade in. But whenever you get into that range, right, where you're into a level of supply and you start to trade sideways for a while, what I want you to look at is if we start pitter-pattering around this 50-day moving average up and over and up and over, and we go sideways, if we break out to the high side, that's going to be the explosion move, okay? So that's going to tell you the break to the high side after a period of consolidation in distribution. What I like to see on distribution is at least 3 to 4 days. And that means either sit on your hands for those 3 or 4 days, don't trade because a big move is coming, or, play the range, you're selling at the top of the supply, you're buying at demand. You're selling at the top of supply, you're buying at demand, right? Apple's getting a nice push right now into its hourly 20-day moving average, actually. You also have NVIDIA reclaiming its 50 EMA on the daily chart as well. But so what I'm talking about here is if we do get this dead cat bounce starting next week, where we do start to bounce and we kind of grind higher, I'm definitely looking at this level here. Okay. And again, if we go through a cycle where we're in distribution for 3, 4, 5 days, we'll just understand whichever side we break out of distribution, start pushing your chips to the table and betting in that directional bias. Okay. Because we will be putting in a new low. So if we do something like that, and then we'd be looking for something like that, right? So dead cat bounce, consolidate. Again, this can do something like this to consolidate, and then bounce higher. Now we're time to rock and roll. 16,000, 16,400 is what I would be looking for out of this move here. But again, that can completely change, right? To do something like this as well. Okay, so time will tell. I'm not really a trader who's going to kind of analyze 2 or 3 weeks out. I analyze for the next day. So for any of you guys that have maybe come across my YouTube videos and you kind of see me going over technical analysis, my technical analysis is for tomorrow, right? It's for the next day. It's never for, a month out. I have an idea of where we sit at on the charts, but it's never like a month out like that. So I'll kind of understand exactly, where potentially we could be heading, but all in all, I'm just mainly trying to figure out where the hell can these stocks go tomorrow. And in the main levels I'll start off with is on every chart, even when I'm trading futures, I'm going to start off with the daily. Okay, I'm going to start off with the daily, where are we at? And then I'm going to look at the hourly, and then I'll day trade off the 5. So sometimes when you guys see these big charts on here, I'm just chart watching right now. I'm not trading this. Like, you know, like I'm not like, you know, trying to trade 4 screens at a time here. I have an idea of where I want to get in and out. And then I'll flip to the chart that maybe if some of you guys have been watching the YouTube videos where I have just the 20 and the 200 on my screen, I'll trade that. It's a lot cleaner on the eyes, and I'll kind of mark out my supply and demand zones. And then I'll kind of come back to these charts just to see, you know, what we're doing. But I like pulling these up for these type of videos. That way we can just get a big picture, so I don't have to sit here and draw a bunch of supply and demand zones, right? So again, let's just do some quick analysis here. Looking at the 1 hour time frame on all these charts here, I'm going to switch back to NVIDIA's hourly chart. So hourly chart on all of these, 5-minute chart on Tesla needs to be switched. So what I'm going to look at here, I'm looking at the hourly candlesticks, right? Quick analysis. If we start off with the NASDAQ futures, we came in, we put in a low, $14,609.25. Okay, everyone's got it down there. Now we're bouncing. So 1 hour time frame is coming into supply, meaning that if you took a dead cat bounce here, I would take profits. Does that mean that we're not going to go higher? No, but I would rather be safe and take profits here. Now, what are we going to want to see? We're going to want to see the 8 a.m. Pacific Standard Time candle. I'm located in California, so all my time zones will be Pacific Standard Time. So as soon as we clear out 14,706, we have room into 14,742. So we got 40 points back up to the upside here on the hourly candle into the 20-day moving average at 8 o'clock. Again, is there a long position right now? No. Sit on your hands for another 15 minutes and see if we confirm. The last thing I want anyone to do right now is look at the charts green for this hour, okay? Jump long and you get smashed. How many times has that happened, right? Like how many times have you seen the video pop and you get long and then it pulls down? Look at Apple. I mean, Apple looks fucking great, right? Look at Apple. Apple's been pushing higher off the bell here. It's coming into a little bit of resistance. But again, you know, how many times have you taken a long on Apple now and then it pulls back $1, right? It's like, you know, so again, wait till the top of the hour. Once the top of the hour comes, you'll be able to kind of see, are we going to confirm to the upside, or is just a dead cat 1 hour bounce? We're kind of come back down to the middle of the range. Okay. The NQ for me to have some serious follow through. I mean, you know, it's got to take out like 14,700s, 14,790s. You know, it's got to get over the 20-day moving average here. So I'd like to see this hour confirm, maybe take it for, you know, 20, 30 points, and then anything over 14,739, you've got room to 14,820. That would be your bigger move in here over the 20-day moving average on your 1 hour time frame. But again, you know, slight dead cat bounce here for, you know, extended selling week. And I had Apple short today too. I mean, the short setup on Apple below 170, 170 looked great. And this thing just bastards trading at 173.50. So what I would look for here on Apple, if Apple starts taking out 174, right? If Apple can take out 174, we might have a little bit of a position there, maybe to 175. There's $1 in Apple. Looking at Tesla now, Tesla's kind of getting rejected at previous first hour highs here. What I would look for on Tesla, below 214.89 has room to 213.55, but below 213.55 is going to wash, okay? And your potential on that would be around 210. So again, you know, if the market wants to get a little haywire towards the end of the day, we would really be looking for around 213.50s on Tesla to kind of wash out into 211. Definitely kind of keep that in mind. But again, right now, if you're not currently trading anything, you're just kind of hanging out and you're just watching price action, put yourself mentally in the situations, right? Put yourself mentally in the situations. You know, good day today in the room. A lot of guys making money in Evolution Traders. Andre with the big banger here on NVIDIA, 1139. Had someone else, 22%, 189 here. You got our boy Biggs 335. So not bad. Little scratch off some Q's bottom calls fishing. So again, Biggs is the guy who's been trading with me for many, many years now in Evolution Traders. He took 335, little scratch on some Q calls bottom fishing, right? So let me quickly see. Boom, boom, boom. Okay. If I pull up the Qs here and kind of show you what he's looking at, right? So Biggs has been trading with me for years. We've been going over, you know, entries and strategies for years now, but he's really, really good at it. So if I pull up the triple Qs here, and I kind of just pull up this 5-minute time frame, I want to see, you know, where was he bottom fishing at, right? So I want to give you guys that idea, that thought process on how to play price action. Okay, so if you pull up a 5-minute time frame on the triple Qs, okay, here's what I want you guys to identify. Okay, the 715 candle, right? The 715 candle on the triple Qs, that's a low wick that put in low of day at 354.71. Okay, 354.71. There's no follow through. You see how it gets sucked back up so huge here? Do you understand? Look at all the wicks here down at the bottom. Look at all the wicks here down at the bottom. This price action is telling you that we've got some buyers in this range, right? These buyers in this range, they're stepping in. We've also got a Bollinger Band down here. So here's the thought process on Biggs's $335 take here, you know, probably in the last 30 minutes. As soon as we get back over the 20-day moving average, as soon as you see this candle get sucked back up, you use 354 as a stop. 354 becomes your max pain. So are you going to sit through a little bit of chop? Of course, you're going to sit through a little bit of chop. But again, that's the level you're playing. You're basically telling yourself that as long as we don't put in a new low and an extended leg down, I'm going long for a potential dead cat bounce here. So you get in once we start clearing out this supply here. When a green candle right here at 7:20 in the morning, green candle takes out red, right? When a green candle takes out red, you get long. Either use a 1 bar stop or use the low of days, and you kind of just get in here. You see we push higher, we pull back, we stay above the low of day, and then we kind of grind higher. So from an entry price of around 355.80s all the way up to a price of 356.80s, you take $1 in 5, 10, 15, 20, 25, 30. Take $1 in 30 minutes off the Qs, make 330. You know, what occupations are paying 330 an hour? You know, send them my way. You know, if there's something that's paying 330 an hour right now, and I don't have to be a brain surgeon or a doctor or a lawyer or something where I'm going to school for 20 years to do it, you know, swing it my way. But I mean, if you can make 330 in an hour, sign me up, right? Sign me up. That's just the way you read it. So again, you know, a lot of people would look at the Qs here and be like, well, we're not really doing anything. It's kind of going higher, but it's choppy. Well, what about this down here, right? Like what about this as a stop? Okay, what about that? The low of day as a stop, right? So protect yourself here and play the upside and play into levels of resistance, right? So what would be your macro level of resistance? 356.80. If you look at the hourly chart, okay, where would you play this into? The 10-day moving average. What is that? 357, right? So you can see the chart here. Like, look at the first hour's lows. Look at where we tested 354.71. We held. So if we lose this spot, if we lose this area, what do? We get out of the trade, right? There's no protection for us underneath 354.70. So that's how you kind of analyze that. That's what it's called to bottom fish, right? We're down at the bottom. You know, you're just casting your line down there. You're going to use a hard stop below the low of day, and then you just sell for profits on the way up. Very simple, you know, strategy. It takes, you know, reading some price action to do that. But again, like I said, you know, my man Biggs over there has been trading with me in Evolution Discord for a while now. So I trust that guy to, you know, make his own sound decisions. And that's another thing too. Guys, if you're looking at people, I don't care if you're looking for a mentor, you're looking at Twitter, you're looking at YouTube, I don't care who you're following. But if you can't learn to do this on your own, right? Meaning whoever you're learning from can't self-sufficiently teach you to do this on your own to where you can identify this without someone looking over your back or telling you if you're in this or asking you if you're in that or telling you where in the sell, you're going to have a tough road. You're going to fail for a long, long time. You know, it's time to just it's time to get on the saddle and start taking trades. Okay. And you learn by doing, right? Now, the number one thing you need to focus on while you're learning is risk management. That's the number one thing you need to focus on is risk management. So protect yourself always when you're trading. Don't just trade like an idiot, but take your trades accordingly, right? And learn, you know, learn. You know, because if like, for example, I can teach anyone how to read price action. I can teach anyone how to read charts. It doesn't have to be this strategy here with the big chart. I can teach you how to draw your own supply and demand zones. I can teach you, scalping strategies that are using the 20 SMA. I can teach anyone that, right? What I can't teach is execution, right? Now, there's a whole mindset shift that needs to be done if you have, like, here's a lot of problems that people have. Fear, right? So fear of losing, right? Fear of being wrong, fear of blowing up another account, fear of losing a funded account, fear of not passing an evaluation, fear, right? So people have a big problem with fear, okay? So as soon as we can work through what's the root cause of the fear, you're going to be a lot better off. People have problems with over trading, okay? What does that mean? You take one trade off the bell, you make a nice little profit, you decide to keep trading because you want to double it. Guess what? You give it back. Now you're pissed off. You make another trade. Now you're down. Okay. Over trading is one of them. Bouncing around strategies is another one. I won 2 trades on this using this strategy. Then I lost all my money. So I need something else. Understand that this game is probabilities. Probabilities, guys. Look at this business like this, right? And I learned this a long time ago. Again, I learned this a long time ago from someone who's been around the game a lot longer than I have. The whole objective of day trading, scalping, swing trading is to be in business for the next 20, 30, 40, 50 years. What is the goal of a long-term investor? To be in this game over the next 20, 30, 40 years, right? Our job as a day trader, as a scalper, is no fucking different. The only thing we're doing is we're making our returns each and every single day, very, very small pieces. But we want to keep the lights on for the next 10, 15, 20, 25 years. That's it. So what I'm getting at by saying that is that a lot of times traders will bounce strategies because, let's say they made $1,000 trading this one particular strategy or concept or certain type of way, and then they broke some personal rules and they gave it all back. Nah, this shit doesn't work. So you go to someone else, or you read another book, or you find another strategy, or you didn't have the right indicator. And guess what happens? You screw up your series of trades. Guys, I tell everyone, take the same setups, the same trades, the same strategies for 20 trades. Once you're done with that for 20 trades, then look at your mistakes. I can guarantee about 70 to 80% of the mistakes or losses that you took were on you because you over traded, or because, you chased, or because maybe you had a gut feeling, so you went with it and it was wrong. Then from there, we start working on, right? We start working on perfecting those mistakes, meaning we work through the mistakes one at a time in a series of trades. Now, the whole thing is that, because I've seen a lot of people that have been, trading a certain style or a certain way, right, that have come into my room, and they said, well, I made a bunch of money in 21 or in 22, and I can't get anything going in 23. Well, the market cycle was different in 21 and 22. So maybe you were more short biased. Maybe you were shorting stocks. Maybe you were buying some stocks in some sector that was going higher, some shit, I don't know. But the market has shifted, right? So you don't really have a trading strategy, but it doesn't necessarily mean that what you were doing doesn't work anymore. It's just that now that you haven't found any success, you're trying to change things around. And it's when people start changing their strategy and changing the way that they're doing things is when you start just putting yourself in this hamster wheel of going around and around in the same cycle, right? So there's everyone has their own mistakes. Everyone has their own mistakes. Like, for example, myself, many years ago, my mistake was over trading, right? Like, I could read the charts, I could make some money. And then, let's say I'd make $500. I'd have a great trade, maybe a great day. I'd make $1,000. And I'd think, well, son of a bitch, I'm going to make 2,000. And I'd find another setup. Maybe it wasn't the best setup. And then I would lose 500. And then I'd say, well, shit, I've got the dry powder. I can get it back. I can just find another one. And then I take another loss. And the next thing you know, you're 3 seconds away from throwing the monitor and the keyboards out the fucking window, right? Because now you gave back all your gains on the day. So that was a big problem for me in the beginning, like especially the first 2 years that I was trading. And it really took me to understand that this game is just all probabilities. I might win 5 trades in a row. It doesn't mean that I'm going to win the 6th, right? And I can lose the 6th, 7th, and 8th trade, but as long as I have enough money and I stick to my rules and my edge, I might make money on the 9th, 10th, and 11th trade, right? So you have to sit through those probabilities. Big example that I give everyone, when you go to the roulette table in Las Vegas or any casino, you have an equal number of red, equal number of black, and then you have 2 greens, right? You have all these 36 numbers on the board. Now, if you start playing black on this roll, and then you play red, and then you say, "Yeah, fuck this, I'm gonna play, I'm gonna play a few numbers on this hand," you're all you're doing is thinning out your risk, right? You're thinning out you're thinning out your probabilities of winning, right? What you need to do, if you play black all the time. If you play red, you play red all the time. It doesn't mean that you win red and you think to yourself, psych yourself out that it's going to be black this time. Now, does it happen? Sure. I've been at the roulette table, put money on black and said, you know what? I have a feeling it's red. Throw money on red, and guess what happens? It hits red. But you know what that does psychologically to you? Is it psychologically allows you to think that your gut will be right all the time. So when your gut's not right, and when you do take those losing trades, now you're all screwed up in the headspace. You're all screwed up as far as what the strategy that you're using, and it creates a big problem, right? A big problem. In trading, it's got to be black and white. That is what it is. You have an edge. You have an edge for a reason. You have risk management. You have a trading plan. You have instruments, which is assets, stocks, options, futures, whatever that you trade, and you stick to doing the same thing. Okay. We don't let our emotions get involved. Does that mean trade like a robot? I mean, I've heard people say, trade like a robot, no emotions. You're going to have fucking emotions. You're still going to get excited when you win, and you're still going to get pissed off when you lose. Just understand that that's both of those feelings are part of this game. Even though we allow ourselves to celebrate the win, we allow ourselves to, sulk in the loss for 5 minutes, and we move on. When we get the next setup based on our edge, we take the trade. It doesn't mean that, well, the last time I took this setup on my strategy, it lost, so I shouldn't take it this time. I can guarantee you it's the time you identify your setup that you don't take it because you were in fear of losing or because it lost last time, is when that trade goes for a fucking home run. It happens all the time. It happens all the time. A lot of traders will sit there looking at the screen and they'll tell themselves, I knew it was going to do that. And they'll watch the trade go all day in their favor, and they never took it. All because they were in fear of losing. Quick note right now, new hour candles opening up, and we have Apple trying to confirm getting over its 20-day moving average. Nice little move here on Apple. Nice little move here coming off the bottom. Essentially, was just a buy and hold off the lows here at 171. So currently trading up towards 174. What I would be looking for here on Apple is to continue to push higher. I mean, if the market wants to continue to bounce, Apple's got another 50, 60, 70 cents left in it before it starts to retrace. Definitely look to the Qs here. We would want to see the Qs get over their 10-day moving average to start pushing towards 357.63. Ultimately, if we do want to see like a day where all day we're just kind of trending higher, we need to get the Qs over 357.70s. That's the NASDAQ 100. So I'm speaking to people who play, tech stocks, right? So your Teslas, your Nvidias, your AMDs, your Apples, Metas, so forth and so forth. I don't trade small caps. I don't trade banks. I don't trade retail. I predominantly trade these big guys, Amazons, Netflixes of the world, Googles, high flying stocks. They're higher risk, but when you know how to play them, and you wait for your levels, you could definitely make money. So I'm kind of just taking an easy Friday today. Had a hell of a swing on Tesla that I was able to get out of this morning. Bit of a short on Tesla, so no real panic, right? There's no real rush, especially when you have a big banger like that go in your favor. There's no real reason to fuck up a good week. So again, on Tesla, what we would be looking for, if that's the end of the road and the fat lady starts to sing here, You know, what we would be looking for is 213.80s for a breakdown on Tesla, 213.80s, 213.40s. If we do start to lose that level again, that 210, 211 would be the spot there. Doesn't mean that we're going down, just have to be prepared on both sides. Have to be prepared on both sides. We still got the Qs trying to push up here. Ultimately, the shorts are definitely still the bigger value, because I want you to think about this. You have no idea where the longs are going to stop, right? We have no idea where they're going to stop. Like the Qs could stop here and we could be trading at 354 by the end of the day, right? Could be trading at 354. So what makes the longs tricky is that we're underneath so many levels of supply that we don't know which level of supply we're going to bang our heads on and stop at, because we're in a dead cat bounce, right? So your ultimate plays are definitely through the short side, Give me 1 second, guys. I got to get someone set up here in the Discord. 1 second. In the meantime, let me know what you guys are trading. What you guys trade today? What do you guys trade? You guys trade options? You guys trade stocks? You guys trade biotechs, futures? You guys trade personal accounts, funded accounts? Let me know a little bit about you guys. What do you guys trade today? Did anyone take any trades today? One second, guys. All right. Today, gonna take your advice. Yeah. $100 a day, $200 a day. That's it. Making like 200 options. Yeah. What stocks do you trade? Like what names? Oh yeah. If you made $200 on a day, is that what you're saying? Is that what you're saying? If you made $200 on a day and it's Friday, I mean, yeah, what the hell? Markets. Oh yeah, beautiful. How about that Nvidia move though, huh? Did you played it short? Yeah. What price did you get in, or what level did you get in, or what made you get into that trade? That was a hell of a move. Oh, you took the bounce. Yeah, so I see the bounce as well. Yeah, I see the bounce. Yeah, just be careful with that analysis though of it being oversold. Yeah, 417. So off the bottom here. So that was the bounce spot here. So if we notice on the right hand screen here on the bottom, the right hand screen here, you can see we put in that last official low, and then you know the 705 candle for me here never took out that low, right? Kind of consolidated sideways. It just essentially did nothing. Our entry was, you know, somewhere around here, taking out that, you know, 418 level, getting green candle, taking out red, and then just kind of using this as a stop, right? So this would be your hard stop. So you give up about $2 on the stock, right? Give up about $2 on a stock and just essentially kind of just sit in it, just let it ride, just, you know, let it ride until where you feel comfortable taking profits. So here's the only point that I'll give on plays like this. These are good plays. I take these plays a lot myself. You know, they don't hit all the time, but when they do, this is what you have to tell yourself. You had no idea that it was going to, you know, trade from 418, right? 418 essentially is where I would have got in. From 418, you had no idea that it was going to trade to 424. You know, nobody knew that, right? We had resistance here, we had resistance here, we had resistance here, okay? We understand, right, as a trader that potentially we can continue to run, we can continue to break these levels, but we have no idea essentially where we can go. So what you want to do on these trades, like how you did it, once you make money, you've got to really fucking be okay with stopping, right? Because here's what will happen to people. They'll make money. Let's say they sell somewhere here, up $1, $2, right? And this trade continues to go, and it continues to go. And now they start feeling like, fuck, I missed out on all this money. I can get back in and make a little bit more. And you get back in and this SOB pulls back, right? And then it wipes out all your gains. So just understand, like on these type of plays, on these type of setups, when you get like an extended oversold bounce, right? And you get a little bit of a short-term dead cat bounce, or, you know, you get a big run up and you get a, you know, big overbought fucking run up, and then it starts to take out previous candles, and you use the high as a stop and you take those. Make sure you're okay with stopping out right there, right? Like on the day, I mean, like you're not going to trade this name anymore. You're okay. Even if this thing, you know, recovers 10 more points, you're fine, right? So main thing, and that's a big psychology thing, like just be where, and it doesn't matter even if it's these type of setups, even if you just take a setup based on your overall strategy, make sure when you take profits, you're good. Meaning that unless you get another A plus setup, you're not going to chase the move because you felt like you missed out, right? Don't do that, because that's the problem that a lot of people have. That's where you start, you go down a dark hole. Like, just don't do that. Just always be okay with those profits, because again, you know, I mean, this move, this bounce, you know, about an hour, so you made $200 in an hour. You know, come on, like that's more than enough, right? Some people have to work 8 hours to make $200, and we're sitting here, you know, on our asses clicking buttons on a screen or on your phone. You know, who knows? Some people trade off their phone. But it is what it is. So right now, Qs, which is NASDAQ, this is also going to be the same thing for you futures guys. Qs are getting rejected right now on their 1 hour 10-day moving average. We kind of put in that spike over it. Again, you know, we're trapped between a rock and a hard place here. So between 356 and around 357.50s, you know, this is going to be a tough spot here. If we do start to give up the bottom here and we start to lose 355.60s again on the Qs, or we lose that 5-day moving average in the Bollinger Band on the 1 hour NQ futures, you know, we could test low of day. You know, look at what happened with Tesla. Tesla tested its 10-day moving average, never confirmed, never even came up here to the 218s, which was our potential, never came up. Now it's getting back down here towards prior hours lows. So I might be interested in something below 213.90 on Tesla. Again, you know, small size, I'll go small size, especially on moves like this. But again, you know, if you can scratch, you know, $1 off this thing, and we can potentially test the low of day and put in a new low of day, you know, not bad, not worth it. If there's, I'm probably going to head out here, guys. It's time for that Starbucks run. But if anyone wants to know any other levels here, drop them in chat real quick, and we can definitely take a look at those ticker symbols. Nvidia is getting a nice push higher here, getting over its 5-minute 50 SMA. Nvidia's got room to around 426. 426. So So my room is kind of set up a little differently. So um my team at Evolution Traders, it's a small team. So I don't really let in like I don't really let in like a lot of I don't really let in a lot of people, because the way I look at it is like I'm not like I'm not too familiar with the way like other discords or other communities are set up, but I know like from what I've heard from people that have come into my room, a lot of people, you know, it might be like, for example, I'll just give you an example. It might be like I'm going to put in a bunch of levels, like let's say for example Apple 174 long calls, Apple 171, like put in all these signals, right? And then just leave everyone out to dry, where I'm posting a bunch of gains and you guys have no idea when the fuck I took these trades. I don't really do that. I do put out a watch list of stocks every night that I'm looking at with particular levels. So again, stocks and the futures, because I do trade futures as well. So I'll put those levels out there. Those would be, you know, macro pivot levels that I'm looking at, that if they can confirm, I'm interested in taking those trades. And then the courses and the video lessons that I have is kind of teaching you guys the different strategies that I use to enter these trades. Now, the charts you guys are looking at right now, I just call it the big boy chart because it's got all these crazy, you know, like people say, spaghetti lines all over it. This chart is just to kind of show us potential, right? Where could stocks be heading? Where could they be going? Okay. There's other strategies and other indicators that I use to also, you know, scalp in day trade, you know, using hour candles, using the 20 SMA, all that stuff you guys kind of get familiar with. But I really go over, you know, it with everyone when they come into the room, and I do like these one-on-one coaching. So like how I'm sitting here now analyzing these charts, I do one-on-one coachings where when you come into the room, let's say on a Friday or let's say on a Monday, I don't care, over the weekend, doesn't really matter. We just schedule, you know, an hour session. We can kind of go over your trades. What did you do? What did you do wrong? What did you do right? Right. We want to like kind of encourage the things you're doing right. And we kind of want to tackle head on the problems that we're doing wrong. And we'll go over these trades. We'll do technical analysis. I'll show you on the chart, all this kind of stuff. So like I treat it kind of serious because it's like this. What I want my traders to do, like for example, if we look in the Discord now, right? We look in this Discord now, right? So for example, we got my guy Biggs here, the 335, and this guy's probably off. This guy's been on vacation all fucking summer. But you know, we got Andre here again. Andre's been trading with me for a while now. You know, popped $1,000 on the Nvidia. So for me, I like trading with guys who not only are going to make themselves money, but make me money, right? As selfish as that is, because this is a business where not only am I going to make money, but you better for damn sure be making money as well too, right? So I try to build it in a sense where it's a trading floor to where you can look and identify your own stocks. And let's say, for example, I'm watching NVIDIA and I'm not even looking at Tesla chart, but you have an A+ setup that based on the way that we trade is setting up on Tesla. You can alert me to put my eyes on Tesla and potentially I can make money just the same way where I can give you guys, hey guys, Apple is setting up here over the 20 SMA, and now potentially put your eyes onto Apple where you see the same things and able to take that trade. So again, I want to make money with the room. So I'm not really one of these people who just, you know, are doing these signals. But again, I do a one-time fee, right? And it's like not for everyone. It's like $300, but it's like lifetime. So that's just so I can weed out who the fuck is serious and who's not, right? Because there's a lot of people who are like, well, how come you don't just charge like, you know, I don't know, fucking $10 or something a month? I'm like, for what? Because it's like, I don't need the 10 fucking bucks. I don't need the fucking $300. Like, I don't need that shit. So it's like, what happens when you have those type of rooms is you get a bunch of people, sure, but you get a bunch of people who want to trade their own way and don't understand what you're doing. And they're just in there to like, tell me when to buy and tell me when to sell. I don't have time or patience for that. I want to teach you guys how to trade and how to understand how to trade. So that way you guys know what the hell you're doing and we can all trade together. I don't want to like, you know, sit there and be worried about someone doesn't know why I took this trade or why I'm getting out of this trade. That does me no good, right? It does me no good. It does yourself no good. So yeah. It's like $297 or something. I don't know. I haven't changed the price in like 4 years. It's $297 and it's for lifetime. So, you know, you get access to like 3 video courses. You get access to the watch list, to the chat room, to talk with other guys, trade with the other guys. You get access to the live streams like this, because normally no $300 just that's what I'm saying. I don't do this to like make money every month. It's just $300, so I know that someone's serious. It's a lifetime fee. Yeah, it's just one time. It's just, yeah, once you're in forever. Like when I put out a new course or a new guide or a new strategy, right? Because sometimes in different markets, Nvidia is continuing to push up higher here. Nvidia has room to 426, 427. I'd look for an ultimate rejection spot there. I looked Apple as well here to see if Apple can confirm this. The Qs, ultimately, I'd like to see them get to 357.66, 357.66, and see what we do there. So I'm not really interested in the longs it until I see what the Qs do at 357.66. But yeah, it's just so I know like who's serious. So, you know, if you're willing to put in the time and you're willing to learn, right? Cool. Like I'm here 7 days a week. Like I'm here 7 days a week. But yeah, and like I don't want to do like something stupid where it's like every month you're charging people. It's like charging people for what? Like, right? There's one time, learn, and then we can just start making money together. Like that's it. Like we don't need to do this month by month bullshit. And again too, but with the way that I teach is very, very different. So I'm a straight shooter. Like I don't fuck around. Like if you're in a trade and we can't justify why you're in the trade, you're going to get called out on it. Not only by me, but probably by someone else in the room. The same way, if we do have a trade that was justified why we got in, however, you know, now it's going against us and it's broken down some levels of support and or resistance, depending on if we're long or short, you know, you will be called out on that. Like, so that's tough for some people. It's tough for some people because people want to, like, a lot of times people want to sit in silence, right? They want to tell everyone when they made money, but they don't want to say when they're holding a fucking bad trade. Like, you know, it's like, don't sit in the corner and hide, right? That does you no good. All that does is prolong your growth. You know, be open about it. Be honest. Hey, I took this trade because of this setup and then it didn't work, you know? So now let's get to a point of, well, why didn't it work? Okay, is it your fault that it's not working because you're holding when you should have been out? Or was it the market's fault? Because if it's the market's fault, that's fine. That's going to happen. Remember, it's the market's job to work for us. It's not our job to work for these fucking candlesticks. We have no control over what these candlesticks do after we get into them. It's their job. Like, for example, it was Nvidia's job for you, buddy. It was Nvidia's job for you to continue to bounce. It wasn't your job to, you know, sit there at your monitor and blow the candles higher. You didn't do nothing. You found a good area to get into. Hopefully you had a good stop loss, meaning breaking that low of day, but you had to do nothing. The stock did it for you, right? Like, that's one thing that everyone needs to understand. When you win, it's easy to win because we don't do nothing but click buy or sell, right? When we win, we're not doing it. We're not doing anything. Where we have to do something is when we need to be stopped out. Like when we need to take the loss, like when we need to just, you know, bite the bullet, you know, okay, we're on that wrong side of the probability. But yeah, like I said, so like the way that I teach, everything is pretty mechanical. So, you know, we're going to have our clear entries. We're going to have our clear stop losses. And then it's on you. Like if you're not listening to where the market's telling you should be getting out at, you know, we've got to start doing some deep dives into why are we thinking this way? Why are we thinking that we're smarter than, you know, why are we thinking that we're smarter than the market? I'm interested here in Tesla below 213.80s, below this previous hour low. I'd be interested in it. 215.50s would probably be my stop, but I'd be interested here. 213.80s to potentially put in a new low of day. The only thing I don't like though, is I got Tesla pulling back, but I got Nvidia still bouncing. I got the Qs hanging out up top, and I got fucking Apple, man. I got Apple like getting ready to confirm here. I'm looking at Tesla short. I'm looking at Tesla short 213.80s, losing previous hour lows. But like I'm saying, I don't like that the rest of the market here. I don't like that the rest of the market is holding. But again, I like this setup, and this is a setup that I take a lot of times. So again, probably do small risk. I got to see what the contracts are trading at right now. What are we looking at here? 212. 213.80s. Yeah, cheap. Maybe like the 212.50s, right? 212.50s, or I'd have to go 215s. 215s would put me in the money. That's not that bad. 147 a pop. Small size. Yeah, I'm going to see what this hour candle does here. You know, if we start losing 213.76, I might put myself in the money here on Tesla. Again, I got to really, you know, again, my stop would be over 215.50s, and I got to really watch what's going on here with the Qs, you know. I got Apple pushing higher. I don't like that. Apple's a big weight in the Qs. As long as if I can keep the Qs here, which again, you know, I'm not doing anything, but I'm, you know, if the Qs can stay under the 10-day moving average here, that'll be better for my Tesla short here. There she goes. There she goes. So looking at right now at Tesla to go ahead and lose, put in that new low. Did a bit of money with Apple. Yeah, I see that. So I like the Qs, how they're getting rejected here off the 10. I'm currently sitting in those Tesla shorts here. Again, I'm going to keep a tight stop on it. Again, I'm playing with house money on a Friday, so I took the overnight short on Tesla, which really paid out, sold at the open. Here's another tip for some of you guys that do swing overnight short or long, it doesn't really matter. If you're swinging and the stock goes in your favor, right? Like, so let's say you were long and the stock gaps up, you sell into the gap up, right? If you're sitting short and the stock gaps down, you sell into the gap down, right? You don't wait for it to go more. Sometimes I've talked to people and they're like, well, like, why didn't you sell, right? Like, you were short, the market gapped down, that was your move, you made your money. Well, I thought it was going to go lower. And then what does it do? It bounces, right? Like, for example, like, you know, someone who, you know, like, for example, me, I shorted overnight, right? If I didn't sell on the just original gap down and I'm waiting, I'm giving away profits as it bounces against me. You know, there's another setup is what I'm trying to say. There's always another setup. Like, that is your move. When you short, that is your move. Currently, these Tesla contracts are already moving. They're already moving here, guys. So 213.88 currently trading down. I'd like to get this son of a bitch down another, at least to 213. We'll see. Give it a little time here, as I still have the Qs pushing down here on the hourly chart. I'm looking for that one big wash here. Again, even though we're sitting right at 213.30. Yeah, holding too long is definitely a killer. Yeah, these contracts are up $600 right now. So I like to sell half normally when I get that first push. We'll see here. We have Tesla also, our NVIDIA coming down as well. I'd like to get it down to 213. If it can break the 213 level, we've got a really good fucking shot. But again, you know, we have the Qs that are trapped here. We're trapped between 356 and 357. So this dollar range here is going to be tough. Continuing to push down a little bit here on Tesla. 28.30. Huh. $25.23. Come on, just keep pushing this son of a bitch down. If I can get the Qs to come into 356 here, this Tesla's gonna wash. There's a 213. There's a 213 I'm looking for there. I'm selling half size there. Again, not looking for a whole fucking much here, right? 212s, 90s, that's perfect. Selling half size here on the Tesla. Guys, selling half size here on the Tesla. You know, you're looking at 80 cents, right? You're looking at 80 cents already. It's an 80-cent drop in less than 5 minutes. Candle hasn't even closed yet. Make sure we always want to lock in those profits, especially when you're playing things like Nvidia and Tesla. Guys, you start getting 80 cents, $1, $1.50. That's good fucking money. That's good fucking money when you're playing the right size. Now, of course, you know, if you're playing one contract, you know, your natural intention is to hold, right? Your natural intention is to fucking hold. Oh, because you want more. But again, it's like this. Look at. If you take 10 contract, or if you take one contract and that contract moves $10, right? If you have 10 of them, that's $100. If it moves $20, that's $200 on 10 contracts. If you have, you know, if it moves $30 a contract, right? If you're trading one contract, your immediate action, I'm up $1 on these things. Your immediate action is to think, I'm only up $30. Yeah, but get this through your head, frickin' pea brain. If you had 10 of them, you'd be up $300 in 2 minutes. Selling a couple more here. I took 10 originally. 215 strikes. They were trading at $1.50. Trading at $1.50. Make $1 on it. Currently holding 2 runners left. These 2 runners are up $164. So $164, that's about 75 cents, right? 75 cents or $75, however you want to look at it. It's a $75 move on one contract. So here's what I recommend. Even if you're trading Tesla and you're trading one contract, if you can make 40, 50 bucks, sell it. I don't give a shit. Sell it. Because guess what? There's going to be a point in time in your trading career when you're trading 5 and that $50 is now $250. There's going to be a point in time in that career where you're trading 10 Tesla contracts and that $40, $50 is now $400, $500 in fucking minutes, guys. In fucking minutes. You tell me where you can come in fucking minutes and make fucking $500. So I will, on the runners, what I will do now on the runners, because I have locked in 8 contracts at a profit, these 2 runners, I will hold them until I get what I want out of these last 2 contracts or they break even. And what does that mean? They're currently up. 2 contracts is up $169. If these 2 contracts go to 0, meaning that I lose my profits, not the premium goes to 0. There's a big difference. I'm not saying I'm going to hold, you know, the $500 or $400 in premium to 0. No, that's not what I'm saying. What I'm saying is that these contracts are up $184 for 2. If I lose that $184, I'm fucking out. And I'm out because I will still be green on the initial 8 that I sold. I hope that makes sense. That's how I play my runners. People can play their runners different, however they want. Yeah, see, so that's okay. So just to recap here, guys. Again, this comes with a level of experience and just kind of doing it over and over and over. But again, so I was clearly looking at Tesla's been on my chart all morning because it's always on my chart. Tesla and Nvidia, they're always on my chart. But what I was looking at here was I was looking at the 7 a.m. Pacific Standard Time candle. It never took out the original opening range highs, right, of the first hour candle. I'm also looking at it getting rejected here at the 10, right? So it's getting rejected at the 10, it loses the 5. What am I looking at now? I'm looking at the lows, right? It was the 213.80s. I wanted to see that confirm. If that confirms, I'm in. I'm not even fucking thinking about it twice because as mentioned, my stop loss would have been 215.50. I was prepared to lose it. I'm prepared to lose the $2 on it. I'm not even going to hesitate or think twice. I'm just prepared to lose it because If you're going to play this game, you got to prepare to lose it, right? So I'm already assuming that I'm going to lose this money here. I'm already assuming that I'm going to lose $1.70 on it, right? So as soon as it goes, fucking I'm in, you know, find the strikes that I want. I was looking at the 212.50s or the 215s. You know, the difference in price was about $80. You know, we're talking about $150 a contract here on a Friday. Contracts are cheap. So whatever, take the contracts, boom, we get the washout lows, and now you just sit lows. And my intention was to sell at the pre-market lows here, so the 213 area, I wanted to get into that 213, and obviously if we could touch the 212.80s, which was $1 from entry, it's perfect. It's perfect. Yeah, Tesla, they want 205. They want 200, 205. This thing, before we get any type of significant market rally here, Tesla's gonna see 200, 205. Like, for like, you know, watch, like I don't have to really look at all of these charts. So look at the daily chart here. Look at the daily chart. So we got the gap down here, 207, 207.80s. That's the bottom channel here. That's going all the way to the original breakout here on 6/2. So in June, boom, we had the big pop in June, right, where we reclaimed its 200-day moving average. That's a big level. Yeah, exactly. Yeah, I'd like that. I'd like 207, and if Tesla loses 207, 196, right? Between 196 and 207, yeah, I know it's a 10-point range and all, but you know, like, this is a good load zone here for a fucking bounce. Like, if you just look, right? And I'm talking, you know, like bigger swing moves here, but I'd be looking for something like this to take place. Back up to 240s, 250s. Big drop down. Let's get into this range here. Let's get us an ultimate buy somewhere down in this range, and then let's start slowly working our way back up. So now 2 contracts currently up 213, guys. 223. Trading at 212.79. You got about $1 on that move. Get about $1 on that move. Look at that move. $1.25, $1.30. 212.69, guys. Anyways, go back to the hourly chart. Go back to the hourly chart. So now we've lost the pre-market lows here. That 213. Lost the pre-market lows. $212.68, and that is what it is. Two contracts up 230. So like, even that, guys, even that. Okay, so let's say for example you only fucking play 2 contracts, right, bro? Like, you're in it like $300 or something like that. I don't know, $300. You made 220 something, like $200, call it, right? On 2 contracts on 300 to make fucking contracts are up 67%. So you make 67% in 5 minutes. Fuck, man, you can't even beat that shit. That's how my trading works. Like, that's how I trade. Yeah, I might only be in this trade for 10 minutes, but shit, man, that's all you need sometimes. I'm just gonna sell them here. I don't really got time for this today on a Friday. So let's see what they close me out here. Be a little slippage. It's bouncing. 804 profit. 804 profit. You can't beat it. 10 contracts. So if you just do the math, right? Because again, you have slippage. Again, you're not getting filled at the same time. And again, also, I'm market in, market out. People setting these limit orders and shit. I'm not risking, especially when I'm taking moves like this. Sometimes you don't get filled on limit. Yeah, you get a better price. I don't give a shit. If the move's gonna move, it's gonna move. That's the way I look at it. Again, I always play this week's expirations. I'm always playing, you know, I'm never fucking swinging anything. But it is what it is. So the point I'm trying to make is, all in all, 10 contracts through the previous hour's low. As the price is approaching that previous hour's low, I'm looking to get in. As soon as I see that fucking price break, I'm fucking in. My hand's on the trigger and I'm in, right? So you get in on the move. And what I'm saying is, all in all, through, you know, scaling out 5 here and another 2 here and holding 2, whatever, right? Like, I don't know how much each contract made, but I for damn sure know what the average was. If I made off 10 contracts $800, I averaged $80 a contract. Okay, so the point I'm making is that if you, I don't care, don't look at the 800. You know, don't fucking forget about the 10 contracts. Forget about that shit. Look at one. If you traded one contract, you made $80 in 10 minutes. Who's paying that? Who's paying $80 an hour right now? And the whole goal is do that over and over and over and over and over again. Take $80 here, take $80 there, take $80 here, take 50 here. Just keep doing that, and then buy two. Now you're up 100, right? So you can see the progression, the scalability. Contracts were sitting at around $1.55, $1.60. So yeah, over $1,000. But to see that's the thing. Okay. So the question, how much did I risk? I mean, I was probably risking, like, how much was I willing to lose? I was probably willing to risk, you know, $500-600. I was probably willing to risk 50% of this premium. How much did I actually put in premium? About $1,600-1,700 bucks. $1,600-1,500, something like that. So the way I analyze risk is differently. So let's say, for example, if I buy $1,000 worth of Tesla, golf time, exactly, bro, exactly. I was out golfing on a Tuesday. Weather's kind of shit right now here. It's all gray, but yeah, any day you can get out to the greens is always a good day. So just to make the quick point, if you go in with $1,000, let's just say, all right, you go in with $1,000, that doesn't mean that you're willing to risk the whole $1,000. You might be willing to risk 30-40% of that, 300-400 bucks or whatever. And if you make 300, 200, whatever, then take your money, right? So I never look at it like, oh, I'm in 1,500 or in 2,000 on this play, but if I lose, I'm losing 2,000. No. Never gonna let it go to zero. I might lose 30-40%, but which with options is different. If you trade stocks, you know, I have a clear defined risk, you know, where you can risk $1.25 a stock and, you know, shoot for that. Because if you were going to play stocks, let's say, for example, because a buddy of mine plays stocks, he plays like, you know, I don't know, 10, 15 lots of this shit. But, you know, he might risk, the risk on it would have been around 60 cents. So you're risking 60 cents. So on a 100 share lot, you're risking $60, and you would have made $100. So you risk 60 to make $100. That's fucking good. In my books, that's a 2R in 10 minutes. Tesla probably still looks like it's going lower too. It's right now, if Tesla makes a new low, it's like every trader in America is going to say woulda, coulda, shoulda. You know, you should have fucking held. Yeah, should have. Right? Should have, but $212.47 ultimately is what it touched, the lows. So yeah, again, I mean, $1.40, and it never really came, right? It never really came close to touching our stop loss. So like, even if you were to use a 1-bar stop, meaning this candle here at 820 was our entry, right? Somewhere around this range, 821, it's somewhere in this range. When we broke this low here, if you use a 1-bar stop, 214.47 was your stop. So again, like the way I teach in Evolution Traders, I give you, depending on your risk tolerance, because everyone's risk tolerance is different. So like, if you're comfortable risking 50 cents on the trade, use a 1-bar stop. If you want to risk a little bit less than that, use the 5 SMA, right? If we close back over the 5 SMA, you're fucking out. If you close over the 10 SMA, you're fucking out. And you make it as clean and simple as that. As clean and simple as that. If you want to really give it room, you know, give it the 20, which is way up here. But again, I mean, that's going to really be going against your going against you, but still, I mean, some people, you know, like the big swings, right? They like the big swings. But I mean, just noticing here, you know, we're not having any more follow through. We put in the lows at 212.36. If this starts getting over 213.15, you know, it could bounce very, very quickly back up to 230.80. So it's like, if you were in on that short move, you want to take your profits. So, but yeah, like I kind of I teach that in the Discord, you know, because it's kind of hard to all get out right here, like live in real time. Like a lot of this stuff has to be like, you got to learn prior and then like, you know, go through it a couple times, trading small size. Like if someone was to come to me and says, I got $50,000, I'm ready to trade options, you know, I'm going to start you off on one contract and probably not even start you off on Tesla. You're going to start like on Apple or start on AMD. You know, I want to trade Nvidia and we're going to trade AMD, you know. Well, I want to trade Tesla. Well, we can trade Rivian. You know, you got to start small, right? You want to start the small risk. Rivian had a nice pop off the open. Rivian came down to its linear regression. Look at this shit. Rivian came down to its linear regression at 2018. Put in a nice spike here. So the opening 5-minute break was 2071 and it traded up to 21. Not bad. 30-40 cents on a $20 baby stock. Not bad. Apple's still holding. Apple's kind of flagging up here at the top side. Apple's kind of flagging up here at the top side. Apple would need to lose 173 or 172.84 for a significant downturn. But again, if Apple gets over, what is this? The 200 EMA? Huh. If Apple starts clearing out the 174, I would say that, you know, 174.30s would be evident on Apple here. I mean, it's continued. Look at Apple. Into the 20 bounce, into the 20 bounce, into the 20 bounce, into the 20 bounce. Oh man. When Tesla before the split, bro, when Tesla was trading, me and the guys in the room, holy shit, man, we were looking for 20, 35 point moves. I mean, we were like, no bullshit. Like we were looking for 20 point moves, 15 point moves. I mean, Tesla was insane. Mind you, one contract was like $600-700, but it was insane times. But even now, I mean, Tesla is the best trading stock. Apple's breaking back up to the top side. Tesla is the best trading stock. And as of late, I mean, I've always traded Nvidia, but this year Nvidia is a fucking hell of a mover as well. Probably a very close second, if not the last 6 months, a better trader than Tesla. But I'm glad now we have two stocks like that we can play on a day in and day out basis. Like I was going over in the Discord with one of the guys, with one of the guys, I'm just watching Apple here, with one of the guys, the last 3 months, yeah, I know, the $200 on Nvidia, fuck me, man. One of the guys, 70% of his gains for the past 3 months is, or 60%, around there, was Nvidia. And the other 20% came from Tesla, and then like the other 5-10 came from odds and ends stocks, Microsoft or Meta or something. But yeah, I mean, like my buddy, like he only trades Tesla. Like he's 90% of the time. Like he just makes his living off that. And he's got a wife, kids, mortgage, car payments. I mean, Tesla. That's all you need. And I really stress that to my guys is, find stocks that you like, okay? Not based on how much they make, you know, dollar wise, but like stocks you're comfortable with the way that they move, the price action, the speed of them, and then really just focus on 3-4 stocks every single day. Like just focus on the 3 or 4 stocks every single day. And the index that they're correlated to. So like if you trade, you know, high beta, these big tech stocks, you know, watch the Qs. You know, I don't really give a shit about what the SPY's doing. SPY's got banks in there. They've got oil. They've got retail. I don't really care what the SPY's doing. That has nothing to do with what I'm trading. You know, watch the Qs. Watch the Qs. I would say, you know, depending on the account sizes, watch the Qs. You watch Tesla, you watch Nvidia. If you can't afford Nvidia, you play AMD. You know, Apple's okay. It moves slow, but it's okay. Meta, I like to mix in the mix. I used to trade Netflix a lot, but it's so fucking spready. The liquidity on Netflix sucks. So like that thing moves up and down $1, and it's like you didn't even really have time to set your feet. But when it goes, you know, 10, 15 points. And then it just comes with comfortability after that. So if we look at Netflix over 404.20s actually looks good. Look at this. Coming right up to its 20-day moving average. So again, even though we've had the bounce here, Netflix came from 398 trading at 404. Even though we've had the bounce here, you got to be careful. We got to get over the 20-day moving average here. Amazon as well. Yeah, Amazon's another big one that I trade. I always look at Amazon too. If we look at Amazon, Amazon chart kind of looks like Apple, where it put in that low and it's just been grinding higher here. I can see, you know, end of day Amazon trading close to 133.30s, something like that, right into this 20. In order for me to get appetized on Amazon, it's got to close over 133.64. Yeah, that's insane. I know. Netflix just trades like shit though. But it looks good now. So it's 8:48 in the morning. There's 12 minutes until the new candle forms. If Netflix breaks this 20-day moving average and closes over it on the 1 hour time frame, let's call it 405, 405.90 or 404.90s, and then the next hour candle confirms that, it's got a lot of room higher, 410. Not saying it's going to go to 410 today, but what I'm saying is that like that's the channel that you're in now. You're in that channel. We also are coming into the New York lunch hour, so we got to be careful with that. I teach my guys. It's in one of the courses. I get in depth on it, but I have a lesson. It's first two, last two. So the majority of my money is made in the first 2 hours and the last 2 hours, and 80% of it is in the first two and 20% in the last two. So what does that tell you? That I'm mainly looking to be done right now. I'm not really interested. I don't really care if this continues to fly all day. It doesn't really interest me. Price action gets choppy. It's just, it doesn't interest me. The real moves to be made are in the first 2 hours. And then, you know, after lunch, for me, it's 11 a.m. You know, like after we come out of lunch and we kind of digest for a little bit, between 11 and 1, the close, you know, you might get that one last move. If we were trending higher all day, you might get that reversal where we pull back. Or if we were trending lower all day, you might get the reversal where we pop. Or if we've been going sideways all day, you might get finally the move, right? But again, I focus on the first two and the last two. And right now I kind of just fucking hang it up and I go grab a coffee, take my dog for a walk, and then kind of come back and look at the charts a little bit. Netflix does look good though. If it can confirm. So it broke that 405.20s. The last entry on damn, it's up $5. So one of the strategies that I teach is up $5 from the entry. Yeah, exactly. You see that? Like, look at how Netflix just broke that level, that 405. I mean, I felt like I was talking about it 10 seconds ago, and it just jumps. Like, it just jumps. 405 to 405.70. Like, that's a crazy jump. But it's coming into the 200 here, 405.90s, 406. I'd look for it to stop here. So If you guys want to chart watch for a little bit, see what it does at the between 406 and 406.20. See what it does. See if we get the pullback, right? Like, I'm not saying take the short, but I'm just saying, like, watch it how it's going to stop in this area, and then it's going to do something else. But like the way that this fucking thing bounces, like the way it goes so crazy, it's too fast. Like, you have to, like, you had to have already been in it. Like, the time to get in it here was here when we reclaimed our 20 period moving average at 401. Like, yeah, again, I don't want to confuse anyone on here, but I've got them all on there. I've got them all. I've got I've got simples, and I've got EMAs, and I've got Bollinger Bands. It's Apple above 174. Yeah, look at Apple go. Shit. The entry on Apple after the big up and down was 173.34, so it's up about 80 cents. That's a hell of a move for Apple. I see Apple pulling into 174.30s. I'd take, if anyone's long Apple just by shits and giggles, take profits. Take profits into 174.20s. Because you're coming into a little bit of supply here. But look at the hour chart on Apple. Son of a. Look at the hour chart on Apple. So remember how the short, if any of you guys were watching, how I took the short on Tesla through previous hours lows? Well, look at what happens when Apple confirmed its previous hours highs. That was getting over the the 20 SMA on the 1 hour chart. Look at that. Around 173.80. Yeah, it's only up, it's only up 20, 30 cents, but you see the leg that we're in now. This leg has room to 175. I like this, right? So I want you guys to notice this. You see how it's open here? I like that. That's what I look for. Yeah, buyers are trying to step in. Yeah, there's a lot of options premium there's a lot of premium that's closing in the books today. So you're getting that, you're getting that dead cat bounce. I mean, you look at the daily charts, right? Like, look at Apple's daily, right? Does this shock anyone? Does this bounce today shock anyone? It shouldn't, right? The value is still to the downside, right? Like, look at what happens. Look at what happens if Apple loses 172, 170, 190s, right? It's coming down to 168. I don't care what anyone says. Come back to this channel when Apple loses 170, 195. Give it a few days. Come back to this channel, and I'll have a recap video how I shorted it into 169. That's not a secret. But I mean, even as good as the little bounce that Apple's having today, it's up 10 cents, right? It barely recovered the gap down. But what I'm saying is that this doesn't even look good. It's got like we haven't even taken out a previous day high yet, right? Like, Apple needs to take out 178. It's a long ways away. This thing can do something like this. And this is what, like, you have to start learning. Like, people need to start learning this kind of shit. You see that? Like, does this look like something that could happen here? Does it look like we could do this and then this and then this? Does that look like it can happen? Right. So, like, this bounce doesn't mean anything. Like, you will see the newer traders on social media, Twitter especially, StockTwits even. You will see these guys say, "That's it. Bears are screwed. The Bears are screwed. Bears, you should have enjoyed. You should have enjoyed all this while it lasted. You're fucking screwed now." And then 2 weeks later, Apple's trading at 168. And it's like, what happened to all those guys? I'm not a bull or a bear, guys. I'm a realist. I just like to make money. Like, that's it. Like, I don't care who's in charge. Bulls are in charge, the bears are in charge. That's fine. Again, that's different for investors, right? If you're an investor, of course, like, you want to buy, like, you want to buy at 168, you want to buy at 160. And then, of course, you want it to go higher. But I mean, for traders, you don't care if it's going up or down. It doesn't really matter. All you care about is making money. So Again, this really doesn't matter, this bounce here. I mean, because it gives you opportunities, right? Like, it gives you opportunities to go long, right? If someone liked Tesla long, well, shit, you could have gone in long here over 173.30s. Boom. This was your move. You know, you had another scalp here over 173.69. Again, it's not up a lot, but I mean, 173.70s. I mean, yeah, you're up 50 cents. If you play options, those contracts would have moved. If you got in here, they for sure would have moved. 173.30s, you're up almost $1. That's a hell of a move. Hell of a move for Apple. I'm looking for short-term rejection here, 174.30s on Apple. Let's see what that Tesla did. Look at that Tesla. You see that? So look at the bounce. Look at the bounce, right? If we go back to my entry here. Look at the loss of the previous hour's lows. 213s, right? The 213, or excuse me, the 213, yeah, the 213s. And then we trade all the way down to the 212.36s. But here's what happens when the newer traders or people who are not experienced, right? They take the short, right? Where's the damn short at? Here. Anyways, it's in, oh yeah, this one. So when they take the short, right? They take the short, they go down $1, and then they don't know that they should be selling. They only bought one contract and it's only up $40, and everyone else is making $800, or everyone else is making $10,000. Look at the fucking move on this son of a bitch. Everyone's making, you know, all this money, and the next thing you know, give it all back, and now you're down heavy. Right? So it's like, you got to learn, take those profits down. I recommend everyone, you start taking profits at Tesla at $1. You start taking full size off at $2. I don't care if it goes $10. You can catch $1 to $3 on Tesla daily. I won't even say that. You can catch $1 to $2 on Tesla or Nvidia two or three days a week for sure, and you can make a living off of it. But it's guys who get in, right? They're like, well, you said if it lost, right? Like, if it lost, yeah, but me and my guys also made money too on it. Like, I'm not looking to marry this thing. I want to get in and get out. Now, if you're talking about swings, right? Like, that's different. Like, you want to hold this thing all day, and you want to hold it for weeks, you know? You got to look at some different time frames. The short on Tesla came 2 days ago on Wednesday. If you're looking to swing, it was right here. See this? When we came up to the top channel, right? We came up to this top channel. We couldn't confirm it, and we lost the 20-day moving average. Your entry on Tesla short was 230. 2 days ago, you would have made almost 15 points. Jeez. And I shorted Tesla yesterday. So I still have my block here from yesterday. So look at the block from, whoops. You see this gray block? I'll make this a different color so you guys can see it. Make it orange. You see this orange block? So yesterday on Tesla, when we flushed down to the bottom channel here, then it started to bounce. When we rejected this block here, which was the 20-day moving average, I went short on the same setup I took today, where this hour candles at 10 a.m. yesterday took out the previous hour's lows. I got short, and I just sat in it through 323, 322-ish. And then obviously we open up, you know, at 214, 215, 216, you know, you sell like that, like this was your move, right? Boom, that was your move. So I sold. So that's why I wasn't really too stressed today to try to force trades. This game's all about patience. But again, you know, if someone, look at the market still has a long ways until close, because I'm going to be getting off here. I've already said that twice. But if Tesla starts getting over 215.50s, there's a long position there. Okay, how much it gives you, whether it gives you 50 cents, $1, $5, I don't know, but you know, you got room over 215.50s, 215.60s, maybe 217-ish. That might be a move if it confirms. Again, if it confirms, it doesn't mean get in now because you think it's going to confirm. You got to let it confirm first. But anyways, guys, I'm gonna get off here. I'm gonna recap with the guys in my room, see how we finished off the day over there. Again, if any of you guys are interested in this kind of excuse me, technical analysis, and you guys like this kind of shit to test 215, no. So what I would be looking for here on Tesla, right, is if it confirms, right? So look at this hour candle. You see this, the 8 a.m. candle for me. This 8 a.m. candle, a little bit of a reversal candlestick, right? So it doesn't mean that we're not going to push lower, but I'm just saying that if it confirms that last hour candle, it's over the 10-day moving average on a 1 hour time frame. It has room, if it confirms 215.50s, potentially to go into like 217, right? There's still time left in the market, but again, it would have to confirm, like it has to confirm 215.50s, and you might have a scalp long there. Again, you know, protect your downside risk. I would probably use something like 214.50s. I would give it $1 risk to try to make $1 risk to try to make $2. That's what I would do. But again, yeah. So that's what I would be looking at. Again, if the market wants to continue to push, I mean, right now, fucking Apple is you know, pulling up the market. Look at Apple. Here we go again. New hour candle. Is Apple going to confirm the new hour candle? Like I said, has room to 175. Look at Apple go. Anyone who shorted Apple today got their face smashed into the ground. But anyways, all right, guys. Yeah, like I was saying, if anyone wants to join the room, it's a one-time fee. Again, the only reason why I do that, because if I'm going to invest my time doing one-on-one coachings and teaching and doing these kind of lives, majority of the time I'm doing these type of analysis with the guys in the room, whether it's on a private call, if you want to do guys a private call, whether it's the group voice chat in Discord, or it's live streaming. I started live streaming this week for those guys in there as well. And again, courses, chat room, sit there, bullshit, learn off of other people, make some friends, have a trading team that you guys can trade with. At the end of the day, that's what it comes down to. Trading comes down to psychology and emotions and confidence. If we're lacking any one of those, we're going to be wrong. It doesn't matter how well we can read the charts. At the end of the day, it still comes down to us. But again, evolutiontraders.com. See you guys all on the inside if you guys decide to join. If not, I'll catch you guys all on YouTube. I'm around. Been doing this. I got over 2,000 videos now, I think, on YouTube. I think out of anyone, like my channel is so small, but I think I pump out the most content out of all these guys. Again, because, you know, why not? I'm sitting here at the charts for 5-8 hours anyways doing it. Might as well just pass along information of what I'm seeing. So again, if you guys want to learn a little thing or two, you guys know where to find me. I'll catch you guys all later. Again, God bless. Have a great weekend. Again, for those of you guys, if your weather's nice, get outside, right? Get outside, you know, exercise, spend time with the wife, spend time with the kids, the friends, you know, the family, the dog. It doesn't really matter. These charts are not everything, right? This is not everything. The stock market's not going anywhere. It was here long before you, and it will be here long after you are no longer on this earth. That's just the harsh reality of it. So we're never in a rush to, you know, get to this imaginary finish line that everyone on social media seems to have. The name of the game is keeping the lights on and staying in business, preserving that capital, and making sure that we're making good trades. So again, if you guys you know, have some time this weekend, you know, get off the charts and do some stuff. And if you guys are going to get back on the charts, like to get back on Sundays, start doing your homework, start doing your technical analysis, and invest in your education first, guys. Without education, you know, it's all for nothing. But I'll see you guys all in the next one.